Are you confused about the current state of the economy? Maybe you think that investing in gold is a good idea right now. Many investors are considering gold as a safe place where to put their money during these unstable times. If you are one of these investors, well, then this video should help you make the right decision. I figured out that who better to follow than the billionaires themselves when it comes to investing, and in this video we will do just that. You will learn opinions of 3 famous billionaires when it comes to gold investments. First is the man himself, Warren Buffett, a billionaire investor, chairman and CEO of Berkshire Hathaway. He is also known as the Oracle of Omaha. The second billionaire is Ray Dalio, founder of Bridgewater Associates. And finally, well, watch the video until the end to see who's the third mystery billionaire. After watching this video, you'll have a better understanding about investing in gold. And surely that will help you make better decisions in your investing journey. Are you ready, guys? If yes, let's start off with Warren Buffett. In 2012, Warren Buffett described investing in gold in a very interesting way. Let's hear it out.
If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now you'll have 1 ounce of gold and it won't have done anything for you in between.
On the other hand, according to the billionaire, if you were to buy 100 acres of farmland, it will produce money for you every year. And you can use that money to buy even more farmland. And for 100 years, it will keep producing for you. And after those 100 years, you will still have 100 acres of farmland. Naturally, Warren Buffett applies the same logic to stock investments. Over time, stock dividends and magic of compounding provide returns much greater than those of gold. After all, with stocks, you are buying real businesses. Businesses that produce goods, businesses that hire employees, businesses that own factories, patents, research departments, and everything in between. In Berkshire Hathaway annual shareholder letter of 2011, Buffett described all the gold in the world as a giant cube that would fit within a baseball field. A giant golden cube worth $9.6 trillion. And now take that $9.6 trillion and you can buy all the cropland in the United States, all 400 million acres of it. And on top of that, you can buy 16 Exxon Mobils and will still have another 1 trillion pocket money left over. Now, where would you put your $1 trillion? Please let me know in the comments below, because I personally would probably go to Mars and start a colony. Speaking of Mars, in another interview, the billionaire investor said the following: gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again and pay people to stand guarding it. It has no utility. Anyone watching from Mars would be scratching their heads. In summary, a decent productive asset is going to kill an unproductive asset over time. Charlie Munger, Buffett's right-hand man, is even more blunt. He has the following to say:
I think civilized people don't buy gold. They invest in productive businesses.
Now hold on, Mr. Munger, that's not completely fair, is it? What about wedding rings, jewelry, and even my golden grills? Are those not investments? Well, it's true that gold has some uses in electronics, computers, medicine, and other fields. But still, it produces nothing in itself. It just sits there and looks pretty. Hopefully, now you have a better understanding on Buffett's views on gold, and now it's time for us to move on to the second investor. Before we move on and learn the other view, I have a special request from you, fellow impact investor. I, Will West, started this channel because I wanted to share everything that I had learned about investing with the rest of the world. I will focus on the basics, tips, news, and any other useful information which will help you, a beginner investor, achieve better results in your investing journey. I would greatly appreciate if you would let me know in the comments, what is the biggest financial or investing problem that you are facing right now? Don't be shy, please, whatever it is, let me know, because that will allow me to focus on videos that you would find most helpful in the future. And now, on to our second billionaire investor, Ray Dalio. Contrary to the previous view, billionaire Ray Dalio has a strong belief in gold. And it's not only his words. His hedge fund, Bridgewater Associates, has taken a 30% bet on gold price surge as of January 2020. Dalio believes that gold should be a part of everybody's portfolio to some degree because it diversifies the portfolio. It is alternative money. Billionaire believes that we are in a situation right now where there is too much debt. Too much debt leads to governments printing the money so that the debt can be serviced. And when asked about Warren Buffett's opinion, Ray Dalio simply said the following.
Warren Buffett won't touch gold.
Mm-hmm. Okay, yeah.
You think he's wrong? Well, clearly you must.
I think he's making a big mistake.
Billionaire notes you have to have a well-diversified portfolio. You have to be global and you have to have balance. You should have a certain amount of gold in your portfolio, or you should have something that is hard. By hard, Ray Dalio means hard money. Now, what is hard money, you might wonder? Hard money is often used to describe a physical currency, for example, coins that are made out of precious metals like gold, silver, and platinum. In this case, the currency value ties directly to the value of the commodity, and that is not the case in our current financial climate. The currencies of today are not backed up by any precious metals or anything of that sort. Instead, they are considered soft money. To put it simply, this soft money can be printed out of thin air pretty much indefinitely. Need to make debt payments? No problem. Let's just print some money and be done with it. Unemployment checks? Sure, why not? Let's print some more money. To be honest, I might have simplified it a bit, but you do get the general idea. Knowing that the dollar can be diluted by all this money printing, it's no surprise really that Ray Dalio thinks gold is a way better alternative. It is particularly important to have this hedge in times of great uncertainty, the times we are living in right now. According to Dalio, gold is like an alternative version of cash. It would be both risk-reducing and return-enhancing to consider adding gold to one's portfolio. The secret, according to Dalio, is to find securities that have negative or low correlation with each other. This way, an investor would be able to mitigate the risk of the entire portfolio performing poorly along with the broad market. Data compiled by Bloomberg reveals that gold has very little correlation with stocks, making this asset class one of the safest bets during times of crisis. And now let's summarize what we have learned so far. First of all, Warren Buffett doesn't believe in gold as a good investment because gold simply does not produce anything. It's not a productive asset at all. Buffett believes that there are way better alternatives where to put your money. Ray Dalio, on the other hand, believes that gold is a hedge for times of uncertainty. Unlike fiat money, gold cannot be printed indefinitely, and Billionaire believes gold should always have a small part in a well-diversified portfolio. You might wonder, what is a small part exactly? The opinions here differ, but generally it's considered to be somewhere around 5% of your total portfolio, rebalanced on annual or quarterly basis. If you watched this far, congratulations! Now it's time to reveal our secret bonus billionaire. It's none other than Bill Gates himself. Here's what Bill had to say about gold in a CNBC interview.
It's not like people would say, oh, well, when it gets to $800 an ounce, people will buy 4 times as much jewelry. There's nothing that steps in as a buyer at any price. It's just purely, other people in the future will think it's worth more than it's worth today.
The psychological aspect of what Bill Gates described here is known as greater fool theory. According to greater fool theory, the only reason one holds an asset is expectation that someone else will pay more for it in the future. Many also consider this a form of speculation or even gambling. To be fair though, Bill Gates did make his billions by starting a successful technology company and not from running a hedge fund. Also, while it's true that majority of gold's value is speculative, there is still actual use of gold as a metal in fields of technology, manufacturing, jewelry, and other areas. Now, you might be thinking, investing is great and all, but I'm not a billionaire or not even a millionaire. How do I save enough money to invest in the first place? Well, that's a great question, and that is also something I'd like to talk more about on this channel in the future. Click the subscribe button and the bell so that the YouTube brain remembers to notify you anytime I upload useful new investing videos. And as a final note, please comment, do you agree with Warren Buffett or Ray Dalio or maybe Bill Gates? And please tell me why. If you know a friend who would find this video interesting or who considers investing in gold, share it with them, see what they think. Thank you for watching, and until next time, this has been Will West.